Since the collapse of communism, foreign investment has given many Czechs more money to spend. But now something's gone wrong. Last year, foreign direct investment plummeted from $2.5 billion in 1995 to only $1.3 billion. And in the first quarter of this year, it's down again. So now the government's introduced a package of incentives. But some financial analysts in Prague say what's really needed is a fundamental change in the Czech business culture.
The incentives really are too little and too late. The environment in the Czech Republic has to be perceived as friendly to international capital, to international portfolio and direct investors. Regardless of the incentives, the environment is not perceived as a friendly one today. It's not that long ago that most portfolio investors felt that a dollar invested in this country will yield a very low return, and more likely much of it will get stolen on the way.
Some foreign companies have come in anyway, despite the fact that the previous government rejected incentives as interfering with market forces. But that left the Czechs lagging behind Poland and Hungary, which did offer incentives.
It does not give Czech Republic an advantage. It just puts Czech Republic in line with other countries in the region, so Czech Republic gets on the map of foreign strategic investors, and that's definitely good.
The Czech incentives include a 5-year deferment of corporation tax, waiving customs duty on imported high-technology equipment, and allowing special customs zones to be set up for production plants, as well as training grants, job creation grants and cheap land sales. The head of the Foreign Investment Promotion Agency says there's a range of attractive sectors.
The most attractive sector is automotive components industry. Thanks to the very successful joint venture, Volkswagen-Skoda, but not only by that. We have here the manufacture of components for Ford, for GM, for Mercedes and other cars. Second sector is a traditional Czech strong point. It's precision engineering, including the plastic molding and this type of activities. Further, it is electronic industry, and again the electronic components industry. There is leaders like the Motorola in the Czech Republic, AVX, Kyocera, Matsushita.
With the collapse of the right-wing government last December, the attractions of the Czech Republic's industrial potential have been outweighed by political uncertainty. What's needed now is a clear-cut election result. These new incentives for foreign strategic investors do at least establish a level playing field for the Czechs vis-à-vis their neighbours in Poland and Hungary. But before any big foreign companies come rushing in, they'll want to be sure the country has a stable government committed to keeping the incentives in place.